Hey guys, it's been a minute since I did a video, so in the next 10 minutes, I'm going to go over preferred stock. I'm going to go over MSTR price targets, my newfound confidence in the equity, the preferred put, and a couple of the tidbits I learned at the Bitcoin conference. I didn't really go to any of the events. I just went there to hang out with the MSTR True North guys. So that was really fun, and I got to meet a lot of the fans. That was awesome. Meeting all of you, I learned so much from everyone that follows along, and it really means the world to me that there's such a network of like really successful people that are all kind of in this trade trying to make cash. And again, that's why I'm here. I'm just trying to make a buck. So let's hop in, talk preferreds and the important information that we now have thanks to one of Saylor's speeches. The most underrated idea of the entire conference was that strategy is now willing to sell preferred equity in order to buy back stock below a net asset value of one. That is massive, absolutely massive. It was something I was really, really nervous about. And when Chanos came out with the short report, but the rest of everyone shorted along with him, the MSTR to IBIT ratio has just been getting absolutely nuked, right? So we got absolutely nuked here. Josh was completely right. Double topped at 7.5, and we got smoked. We've had 3 green days in a row. Thank the good Lord. I feel a little bit better. So, what is it that we learned from Saylor's speech? One, we learned that they're willing to buy back shares. And I didn't understand. I know the dynamic of selling Bitcoin to buy back shares. One, it's terrible for optics, for strategy, selling Bitcoin to buy back shares, just selling Bitcoin in general. And two, legally, it's very difficult to do, and there's some regulation surrounding it. So the fact that they can issue preferreds and buy back stock is like massive. Class A stock is absolutely massive, right? Essentially, what they're able to do is instead of selling a Bitcoin, which is a 30K asset, they're able to sell preferreds, which is a 10K asset, and retain the 30K asset if you in fact believe in Bitcoin. Plus, there's already an ATM on the preferred, so they don't have to dump Bitcoin into the market, and that makes it such that it's highly liquid and easily sellable into the market to buy back that stock. What does that mean? Well, it means essentially strategy has a defense mechanism because, to be quite honest, there is a war going on between the shorts and the longs, and the shorts will do everything in their power to bring that multiple down. They know if they bring that multiple down, the more that multiple compresses, the lower the ATM effectiveness and Bitcoin yield is. So something that really scares me is the power of the short to depress the multiple closer to one. And then if strategy or any Bitcoin treasury company doesn't have that preferred equity option to issue and that massive collateral stack of Bitcoin to issue against which to issue the preferreds, they wouldn't be able to buy back the share without selling the Bitcoin. And that would be terrible. If the shorts shorted it to 1 MNAV and then shorted it to 1 MNAV and then Bitcoin yield fell and they didn't have a good leverage structure and they didn't have an operating business to cover the cash flows of the convertible notes, and then the MNAV started falling and the shorts kept piling on, it would be really, 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 really bad scenario. And so that's something I've been thinking about a lot and so I'm really nervous about for a lot of Bitcoin treasury companies. This essentially gives strategy the mechanism and artillery to fight back against shorts trying to drive the MNAV below one. And what they can do now is buy back those shares at a discount and accrue that Bitcoin yield. So it essentially gives them the ability to yield Bitcoin in any sort of multiple scenario. Super important. I'm so glad I learned about this. And it really, really reinvigorates my confidence in the entire capital structure. And I think strategy's onto something here. There are a couple questions surrounding what happens if a dividends goes unpaid, and strategy will sell Bitcoin in the absolute worst case scenario to cover preferred dividends. Just because they need to maintain the creditworthiness of their company, and they have to uphold the payments on those perpetual credit instruments, which I think are extremely undervalued. Again, the nature of these perpetual dividends is just incredible, and people are undervaluing them, especially in a falling interest rate environment. So I'm margined up. So my strike position is 100% on margin because I'm not even doing it for the dividend, which I'll get paid next month. I'm doing it for the capital appreciation of that equity. And I've said this before, I'll say it again. The way I look at strike is there's $37 of MSTR embedded into your $103 of strike. You're then getting an 8% dividend on the rest of that cash, which turns out to be a 12% dividend. So I see strike as being undervalued with regards to the dividend you're actually getting paid cash on cash. MSTR IBIT ratio, we popped off the 200-day moving average. I hope that turns around. I mean, this has been really, really rough few days. I've been in the doghouse. Now I'm going to talk about future predictions on MSTR, and I think that's super important. So I have my Bitcoin price targets. Now, Power Law is the best model for me in understanding where Bitcoin will be within an order of magnitude. And I used to do a lot of Power Law work. I used to model out the Power Law forward using data only up to 2017, 2018, 2019. And it has tended to get the price of Bitcoin right within an order of magnitude. It actually undershot the current or the price of Bitcoin last year by about 30-40%. So I'm not one to say, I think in 2030 there's a real possibility we could be at $1 million a Bitcoin, whereas currently the Power Law is projecting out with a 5.78 exponent around $500,000 of Bitcoin. So I think that's just the order of magnitude you're looking at. I really don't think there's a scenario in which we have a $10 million Bitcoin in 2030 or even really a $5 million Bitcoin in 2030. I think I see it somewhere above 500 grand or somewhere around 500,000 to $1 million. If you use different exponents, you can get a higher multiple on the price of Bitcoin. You use higher exponent, you can get closer to 500 grand of Bitcoin in 2030. So, and that doesn't account for bubbles or random walk movements. It could be anywhere. But that's kind of the order of magnitude I'm looking at into the future. Why is that important? That's hugely important when it comes to modeling out the MSTR. So I really went to town here. I really went to town modeling out MSTR. And I've done this before. I'm going to do it again. And I use the MNAV on the number of outstanding shares, not the fully diluted outstanding shares. So my MNAV is a little bit different than is reported on strategy sites. So don't mind it too much. What I'm doing is forecasting out the Bitcoin growth based on ATM, preferred, and Class A. I assume they don't increase the amount of convertible debt they have over the course of the next 5 years, that's not going to be the case, but I do anyway. So I just have to kind of hold one variable constant. I don't really know what the convertible debt's going to look like. Right now, I'm saying monthly ATM percent of market cap is 2% of Strategy's market cap will be ATM'd into the market using Class A. And you can see here, it turns out to be about $2 billion a month right now, which is low with regards to what they've been doing, but I like to have conservative figures. Then the ATM on the preferreds I have as being 100 million a week, up to 700 million a week, up to 250 million a week in 2026. And I think that's very conservative, but you can ratchet those up in the spreadsheet as you like. Now I have debt targets, actual debt. That takes into account the preferreds, which is super important. And then I also have the target debt, assuming a 25% debt to equity ratio. All of this takes into account Bitcoin's price. Again, the Power Law trend is the price I use for these growth assumptions. This one's actually super low. My Bitcoin price target's up to 320K. Some of the other models I use different price targets, but point being is how do you model out the kind of different equity issuances for a strategy, and what do you get in terms of share price based on different MNAVs? And so this is a constant 1.85 MNAV, which right now is actually lower than where we are based on the way I'm calculating MNAV. So you can see the capital raise breakdown. So first we can look at the share price. That gets you to about $5,000 a share in 2030 if they continue on and that MNAV stays pretty constant. And they don't change the strategy yet. So I think that's kind of my base case, $4,500 a share in 2030. Now, the capital raise, you can see here, this is the dollar capital raise total relative to the ATM preferred in yellow and the ATM Class A in green. That's obviously compounding. And this is the debt versus target debt ratio. So you can see the target debt's in blue, the actual debt's in red. I like to keep that conservative. And so what I'm really saying here is they won't be levered to the gills. They won't be up to that 25%, which I think is conservative as well for the number of Bitcoin they'll acquire. Based on this scenario in 2030, they'll own 3 million Bitcoin based on these Bitcoin price targets. If you're worried about dilution, then you can just use IBIT calls because Strategy is the biggest player in the market, or going to be the biggest player in the market, and they will be buying Bitcoin. Now to wrap this up, one theme of the Bitcoin conference was all this Bitcoin treasury stuff. And that's all good and well. And, I'm excited about Bitcoin treasuries, this, that, and the next thing. I'm not that bullish on the idea that all of them are justified premiums, especially once Strategy starts kind of putting their tentacles into each of these other jurisdictions and markets. It's going to be very difficult for companies to compete with regards to fixed income products. Bitcoin yield at the bottom of the curve, the ramp up period is very high, but it's really high if you have a strong operating business and the ability to take on low interest rate convertible debt. But that just means you're highly leveraged if you're taking on a lot of convertible debt. And two, that Bitcoin yield is effectively not a product of the collateral on your balance sheet, it's a product of your operating business. So I don't think Bitcoin yield, I actually think Strategy is going to have a very, very high Bitcoin yield relative to its competitors over the long term, even though it's significantly larger than its competitors. That's simply because I think it's a winner take most in terms of the fixed income market. And that's the real tap here. The real tap, and I said it in my tweet a little bit, the monopoly is on the issuance of fixed income because of their credit quality strategy. There's no monopoly on issuing ATM, like sorry. But that premium strategy's premium is justified because of their ability to yield Bitcoin with their Bitcoin as collateral, and the arbitrage between the CAGR of Bitcoin and the CAGR of the bond market, essentially. So, I mean, I'm not comfortable holding any other Bitcoin treasury companies based in the US other than Strategy as of right now, unless I'm trying to diversify into their operating companies. And so I think Bitcoin treasuries will be important, and they will continue to be important just to preserve cash. But a Bitcoin treasury and a Bitcoin financial services company are two very, very different things. And Strategy is a Bitcoin financial services company or a financial securities issuer, where other companies I think should and will continue to focus on sweeping their cash flows into Bitcoin. Not every company will be leveraging their Bitcoin to issue securities. I don't think. Maybe they will, and maybe there's going to be demand in the market for that. But as of now, I see Strategy as kind of a winner take all.